Okay, so let's look at the question. Been given information about Joshua Mulea. He's a manufacturer. His trial balance is as follows. Okay, so we've got all this information in the trial balance, which we're going to be looking through as we make these accounts and these statements. Right. We've also got additional information here for the raw materials, the goods that we use to make our finished products, our finished goods, which is self explanatory. These are the goods that we finish producing, and our work in progress. Work in progress is the goods that have been partially finished. Okay. So, required from the details above, prepare the manufacturing account, the income statement, and the balance sheet. All right. So, the first thing that we need to prepare is the manufacturing account. Colleagues, what's the purpose of the manufacturing account? Mr. Chimonia, Madam Sylvia. Colleagues, you can't tell me you are solving a question where you're not understanding what you're solving for. Okay, it's not good to solve a question where you don't understand what you're actually solving for. All right. Thank you very much, sir. That's correct. The purpose of the manufacturing account is to calculate the cost of the goods that have been manufactured for that year. All right. So we begin. Okay. Remember, as I said, the manufacturing account, you've got three main sections. What are these three main sections? I just want to see if we remember what we did. Was it yesterday? We did this yesterday. So I think I want to see if we remember. Yeah. Mm-hmm. Uh-huh. Overheads, yes. Colleagues, are we all okay with that? Direct materials, direct labor, and overheads. What are overheads so that everyone is up to date? What kind of expenses, sir? Okay, let me. Overheads, these are like the indirect costs. Okay, they're not easily, these costs cannot be easily traceable to the finished product. Okay, direct materials and direct labor, you can easily trace it to the finished product, but the overheads you cannot. So think of overheads as the indirect factory costs. Then those costs which are attached to the office, where you have the selling and admin expenses, those are the periodical costs. Any costs that are not attached to the factory but to the offices are called the periodic costs. Okay? You've got the production costs and the periodic costs. Production costs at the factory, the periodical costs at the offices where there is no reduction taking place. Okay, so we can begin direct materials. So what's the first item of the direct materials that we're going to add in? Thank you very much, sir. Yes, colleagues, when you're doing these kind of questions, you look for the opening inventory for the raw materials, which is here. Okay, opening inventory. Mhm. Okay. He works in the factory. So okay, okay, so Mr. Emma, then you can tell us the indirect costs that or the overheads that you incur in in the factory. So this is actually your topic, even. I or in the or but still more, yeah, in the mine. Okay, but still more. You're also going to be the part of our presentation team. You, Mr. Chimunya, Madam Sylvie. Okay, so that everyone can grasp the concepts about this topic. Okay. Yes. All right. So yes, opening inventory of the raw materials. Colleagues, these are the raw materials that you've started with at the beginning of the year. Okay. It's the opening inventory, raw materials. Okay, we said it was how much? 15,130. Okay. Next item. Yes, purchases. Okay. So we look for purchases of raw materials 78,008. Is there any carriage inwards in here? There's no carriage inwards. Are there any purchase returns? Return outwards. Let me see. Okay. Okay. So then the amount we can put it here in the mid. Okay. 28,108. So colleagues, if there was carriage inwards for the raw materials, this is the delivery expense we incurred to bring the raw materials to the factory. You would add it to purchases. Okay. If there was any carriage inwards of the raw materials. Then, if any raw materials were returned to the supplier, returned outwards, you would deduct, okay, from the purchases plus carriage inwards, you deduct. So, since we don't have that information here, we can just add these two values, okay. So, we add these two values. Yes. Were you there yesterday? Were you there yesterday? Okay. Can someone from yesterday? Yes, under the statement of profit or loss, okay? Under the statement of carriage outwards, it's the when you are delivering goods to your customers and you are taking on that expense to deliver to them. That's your carriage outwards, okay, Mr. Twam? Yes, and you never deliver raw materials to your customers. You're only delivering finished goods. That's why you're going to find it in the, you won't find it in the manufacturing account. So thank you for that question. Very important. Yes. So colleagues, this 98,238, what does it represent? Yes. Yes. Total cost of the raw materials available. Okay. All the raw materials you had for that year. Thank you, Mr. Chimoni. Okay. What's the next item? Yes. Why are we doing this? What are we trying to find? Yes. Yes. Colleagues, we want to find out the cost of the raw materials that we used. Okay. We are not, that's the cost we are. Oh, there were people trying to join in. Come, I wasn't hearing that sound. Someone said on the group, join in. He was busy. I was busy explaining, so I did not see those who wanted to join in. Okay, yes, total closing, less closing inventory for raw materials. So, closing inventory for the raw materials, we can see it here. Okay, this 18,100,000. Okay, now in our balance, I mean, in our statements, these three zeros, okay, we're not including, we're just putting them on top there. Okay, if you want, you can put the whole amount, but it's best to just shorten the amount so that you make life easy. Yes. Now on top here, this in inventory at 31st December. So when you see December, then you know that's at the end of the year. These are the raw materials we remained with at the end of the year. Mm-hmm. 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 All the delivery van expenses. As I said, you never deliver raw materials to your customers. So these delivery van expenses, this actually discourage carriage outwards. Mm. No, that's how we learn. Okay. You get things wrong, you will learn. Yes. So in the balance sheet, you never put expenses. Balance sheet: assets, liability, capital, and drawings. Just those four things. Okay. Yes. Any other question before we find the cost of the raw materials that we used? Okay. So 98,000 minus 18,100, 75,138. Cost of raw materials consumed. Okay. Any questions? Okay. We go to the next subsection, which is direct labor. Okay. Do we have direct labor here? Let's see. Delivery. Oh, manufacturing wages. Yes. Direct labor, manufacturing wages, 90,940. Are there any other direct expenses where it's written at direct expenses, which has the word? Okay, so manufacturing wages, where is it? Where is it? Where is it? So okay, yes, here, 90,940. Okay, so we add. Okay, when you add direct materials and direct labor, what do we call this? Thank you, sir. Prime cost. Yeah, so this is the prime cost. Yes. Don't ask at sir, what if we ignore and don't say prime cost there? I don't think you'll be penalized. Okay, you still find the cost of goods manufactured. All right. So yeah, but it's better just put prime cost here. You add this to and say, okay, prime cost. Any questions? What comes in next? We call them production overheads, manufacturing overheads, factory overheads, whichever. Okay. All right. All right. Let's see where are these overheads. So, as I said, if it has the word factory attached to it, it's coming under the overheads. Okay. So let's see. Here we've got lighting and heating. Okay. So factory, 5,178. 5,178. Which other overhead? General oh, yes, general expenses. Factory here 11,280. 11,280. Okay, what else? What else? Oh, we have rent. Factory here 9,600. 9,600. Yes. So for production of, are there any others? Which, okay, let me see. General expenses are put for the factory there. Hmm. Yes, if there's, yes, here there's no depreciation. Yes, if there's depreciation, the depreciation of the plant and machinery will have to come under the production overheads. Okay. Depre- Yes, yes. Mhm. Oh, and we have machinery here. Yes, but since there's no depreciation, if there was a depreciation charge, this machinery here, it's in the factory, it's not in the offices. Okay. So if there was depreciation, would have put the depreciation of this machinery here. But they haven't, they've told us ignore depreciation. Is that okay, Mr. Kasono? Mhm. Don't. mm. So, yes. So, colleagues, take note of this, all right? If there was depreciation here, you would have calculated the depreciation of the machinery under the production overheads. Okay. Mm. Yes, it's an asset. Yes, the part as not as an expense. Just rub out that part. Yes, yes, yes. But what you have said is very true. That machinery is going to be found on the balance sheet. Okay. Okay. I believe those are the overheads. I don't think there's any other overhead. Yes, please go ahead. Mm, mm, mm. Is it the same as what? Yeah, yeah, factory and office. Yeah. Mm. They often, yes, but they will appear in different statements. As you heard earlier on, as I said, you have your production costs and your periodical costs. The periodical costs are the ones at the office, this office here. Okay. Was there another hand raised? Yes. Mhm. Yes. Thank you, Mr. Chimoni. I hope we're all okay with that. So we get the total here, 26,568, right? This is the total production overheads. So we're going to get the total prime cost plus overheads. We get 192,676. The unadjusted cost of goods manufactured. Okay, colleagues, this is the unadjusted cost of goods manufactured. Okay, we're yet to make the adjustments. And what are these adjustments that we have to make? Yes, which work in progress? The uh-huh. Yes. So before we do that adjustment, any questions, colleagues? Cost of goods manufactured. Okay, I think just well, the thing about it is when you say total already, it means you have finished and you've got the total. So before those, so you still have some adjustments to make. So I don't think it would be fair just to say total right here because it's still going to go through some adjustments. Is that okay, Mister Kaswano? Yes, yes, yes. Today I found out that name. Okay, I was because you see in most books this part will be left blank. Here. They'll be left blank. So today I found the name. Okay. If you want in the exam, colleagues, you don't have to name this one. You just leave the figure there. Okay. Just leave the figure. Don't stress yourself. To haven't put a name, I'll lose a mark. No. Okay. Unless your lecturer is a sadist. Okay, that type of lecturer who just wants people to fail. Yes. So why are we adding opening work in progress and why are we deducting closing work in progress? Yes. Find the total cost of the final goods that have been manufactured. Remember, work in progress, the opening working. Mhm. Yes, you add opening work in progress and you sub. Mhm. Wait, what's your question? Sorry, you've lost me there. Mhm. Yes, the open, you add the opening work in progress because those are the ones. Yes, those are the ones the company started with at the beginning of the year. They are the partial goods that they started with. So they're obviously the first ones to um, be produced to make the finished goods. So that's why we're adding it. Then we're deducting the closing work in progress because we're only interested in the cost of the goods that have been fully manufactured, the finished products. We're not taking into consideration the work in progress. Yes. Consumer friendly, huh? Yes. So today it's to ask because you remain with videos which you cannot ask. Yes. Someone raised their hand. Yes. Oh wait, this is the I've put the closing, the opening work in progress is here. Yes, someone was raising their hand. No. Overload, not overload, overhead. Overhead, don't overhead. Yeah, yeah. How can you know if something is named production if there's no word factory attached to it? There's no. If it hasn't got factory attached to it, then it's going to the office. If it hasn't got factory, it's going to the office. Uh, yes, you have to know those concepts so that you can't be tricked in these questions. Okay, you have to know those concepts. That anything that is, if you hear the word direct, like direct expenses, direct labor, and whatever, just know it's coming in the manufacturing account there. Anything that has got the word factory attached to it, just know it's going under the production overheads. If it hasn't got any of those words, then you just go, it's going to the other statements. It's going to the offices. It will always say, they will never leave you guessing. Okay. If you see if you see a lot of these questions, they're always going to mention so that you know where to place it. So Mr. Twamp, if you don't. Mhm. Which three things? Uh, oh, here, they are here. Yes, here. Rent factory, we put the amount. General expenses factory, we put the amount. Maybe I should put it like this. I put factory here so that for static purposes, is that okay, Mr. Twambo? Are you there, sir, Mr. Twambo? It, oh, let me just get time. Sorry about that, was kicked out. Mr. Twambo. Yes, I was kicked out when you were speaking. If you could just repeat what you were saying. Wonderful. Sachimunya, you're shining today, huh? Yes. 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 Okay. Are there any questions? So this is the total cost of goods manufactured now here. Add work in progress, opening, subtract, closing work in progress. So this is the total cost of goods manufactured. Yes. Any questions before we go to the next statement, which is the income statement? Right. Oh, the other method. Yeah, you can do it also like this: 460, 12, 840, you subtract, then don't subtract again, add. Like that, Mr. Twambo. I think the other way is better, where you just add and then subtract. But anyway, whichever makes you feel comfortable. Okay. Okay. Okay, no, that's true. That's true. Just remember, colleagues, do not subtract. Here, when these two numbers are interacting, do not subtract. Just add. Yeah. Hmm. At this time, spoon feeding is now needed. At this point, you need to be spoon fed. Okay. Any questions before we now go to the income statement, which comprises of the trading account and the statement of profit or loss? Okay. So, colleagues, what is the purpose of the trading account? Yes, to calculate gross profit. And then the statement of profit or loss? Wonderful. Colleagues, have we got that? Trading account, gross profit. This is the profit you get after you deduct the cost of goods sold. In the statement of profit or loss, the purpose is to get the net profit after you deduct the selling, admin, distribution costs, these operational costs, or these periodical costs in the office. And that gives you your net profit. Okay, so what's the first item that we put? Sales revenue. Okay, yes, sales revenue. Sales revenue 273,000. So it says sales revenue. Do we have any return inwards? Mm-hmm. Mm-hmm. Oh yes. Thank you, Mr. Foster. Mr. Foster. Huh? Mr. Foster. Yes, colleagues, you have to put the those titles. Yes. It's very important. So this is how you put the title. Okay, you say income statement. Oh, you put the person's name first. What's the person's name in this question? Or the company's name? Joshua Mule. Yeah, so it's a Joshua Mulea. Okay. Then next line, you put income statement for the year ended, or the year ended 2006. Okay. Then also for the manufacturing account, you put Joshua Mulea manufacturing account for the year ended 2006. So thank you for that, Mr. Foster. You will get some marks for format. Mm-hmm. Okay. Let me do that like this. Yes. Okay. Mm, yes. Sales revenue 273,000. Um, what comes next? Is there any return inwards? Um, okay. Colleagues, if there was return inwards, what is return inwards? Mr. Twam. Oh, that's very correct, sir. Yes. Goods that have been brought back by the custom. So if we had return inwards, we would have put here in the mid. Okay. But um, yes, there's none. There's nothing. Okay. The next thing now. Yes. Opening inventory for finished goods. Here, so here, finished goods opening inventory 48,500. Uh-huh. What next? Mm-mm. 1st January 2006, finished goods. It's the opening inventory. Here, sir. Yes. Yes. Oh, okay. What who said? Mr. Chimoya said something. Then I think I was answering Mr. Kasono's question. Oh, he was stating what item is coming in next. After opening inventory of finished goods, we now bring in the total cost of the goods manufactured. Okay, so that we can get the total cost of goods available for sale. Yes. Okay. Okay. Yes. So this is the total cost of goods available for sale. Goods available for sale. Okay. Then what next? Yes. Yes. Closing inventory. So closing inventory of finished goods. 49,560. So when we deduct these, what have we tabulated? This 189,236. No, no, that's what we just here. The cost of goods available for sale is here. It's cost of goods sold. Thank you, madam. Then what do we do next? Yes, gross profit. 83,764. Yes. Any questions? What do we add in next? We've skipped one thing. This salesman commission here. Okay. After gross profit, any form of income is added. So if you hear commission received, rent received, discount received, decrease in the allowance for in the provision for doubtful debts. Yes, any other form of income you add to the gross profit. So we include this salesman commission. Yes, yes. Ah, ah. Is there any other income here? Let's see. When finding the gross profit. Wait, colleagues, I think this salesman commission is maybe actually an expense because it doesn't say it commission received. Oh, no. Okay. But if you see, no, I've thought about it. They usually put received with this type of question so that you know that it's income. Yes. Sorry, colleagues, about that. Okay. People even started rubbing. So here, mm, so less expenses. Oh wait, what was your question, sir? So maybe I forgot. What was Uh-huh. Yes, yes, yes. We're, sub- we're subtracting, sir. Okay. We're subtracting. Let me put here less cost of goods so that when you start. Okay, so we'll start with the salesman commission even here. The commission we're paying our salespeople. Uh-huh. What other? Oh, we've got rent office, 4,000. What else do we have? Um, General expenses office 7632. Where's that? General expenses office 7632. Okay, what other expenses? I'm feeling lazy to be looking up and down. What other one? Oh, lighting and heating. Okay. How much is it? Let me check. So that okay, 2,220. Okay. Okay. Mm, what else? What? Or delivery van expenses. Delivery van expenses. We see how much is it here? 5,000. Okay. Office salaries 12,570. Okay. Mm, mm-hmm. Mm, 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 mm. You want to say you don't need to repeat it. Mm, Mm, mm. Okay. Those are all the expenses. Okay. Mr. Trump, but when it's not there, you don't repeat it. Or maybe, but okay, wait, there's some truth in it. If it's already appeared in one account or one statement, it's not going to pay in another statement. So there's actually some truth to that. It's just that I was wondering what you meant at first. Mm, okay, so these are our total office expenses, okay, or the periodical expenses. So we now want to get our net profit. 83,764 minus 47,542. We get 36,222. Okay, that is our net profit. Yes. Any questions? We are done with the statement. Mhm. Yes, you can. You can. Mhm. So the purpose is not to copy. For today, the purpose is not to copy. Okay, but yeah. Mhm. Uh, okay. All right. All right. I think. All right. But at first, as the video started, you are still able to see the things, right? Because now I'm wondering that. I hope it will be visible. Let me know if it's not visible, okay, colleagues? We'll find a day, then I can re-record it. Mm. Oh, but here. Oh, yeah, okay. Yeah, okay. Okay, colleagues. Any questions? It's gone quiet. No, no, so you are getting an A plus. The dedication you're putting towards school. That, mm. Oh, for the year ended. Yes. Why did I put this? For the year ended. Don't know why I was putting as at. Although I don't think you can be penalized, but anyway, this is the standard one for the year ended 31st December 2025. 2006. So, colleagues, for the balance sheet, remember, okay, assets, liabilities, and capital, and also there'll be drawings, okay? Do not put any expense or any income in here, all right? Do not put any expense or any income. Yes. So we start with our non-current assets. Colleagues, what are non-current assets? Yes, yes. Something you can own for more than a year. Okay. Oh, you said 12 years. Whee! So if you said 12 years, he may, oh. No, I never saw. Me, I'm just here. I'm concentrating here. Okay, colleagues. Here in the balance sheet, you have this first section here where you have the cost of the asset, any accumulated depreciation, and then the net book value. Okay. So remember, since there's no depreciation here, but let me just give you the context. If there was depreciation, okay, as I said, as the years goes by, that depreciation expense is building up. Okay, as the depreciation expense builds up, the value of the asset is going down. Okay, so if in this question there was depreciation, they would have also given us the accumulated depreciation at the beginning of the year. Okay, then whatever depreciation you calculate for that year, after you put it as an expense, okay, in either the manufacturing account or the statement of profit or loss, that depreciation charge, you add it to the accumulated depreciation you've already been given. That's the one that will come in the balance sheet. Should, okay, let me just show it with numbers. For example, in this question here, if you found accumulated depreciation 1000, yeah, then you calculate depreciation 500. The accumulated depreciation will be 1000 plus 500, 1500. And that 1500, you put it here and accumulated depreciation. Is that okay, colleagues? Or you need more numbers to see that? Yeah, since there's no depreciation, so the accumulated depreciation part will be thing blank. But should the lecturer put depreciation there and accumulated depreciation in the trial balance, or if you see provision for depreciation, then just know you add your depreciation expense for that year plus that provision for depreciation or accumulated depreciation you've been given in the trial balance. I'll show you how that happens for now since it's not here. So let's just concentrate with what's here. So what's the first item we'll put? What's the first non-current asset that we'll put? Premises. Premises 80,000. Okay. There's no accumulated depreciation or no depreciation calculated. So even here 80,000. Next one, machinery. Okay, machinery, how much? 65,000. Next, is equipment, 22,000. Anything else? This delivery van is the expenses. Delivery van expenses. They haven't put, do we have the delivery van at cost? I don't think, don't, because if you put delivery van expenses, that 5,000, and you've already put it in the statement of profit or loss, I think you'll be in error. So the delivery van, since you haven't been given the amount, its value, don't put it. Okay. I want advice to put this 5,000 there. Okay. That's the first part, the non-current assets section. Any questions before we go to the current assets? Excuse me. Mm-mm. Any other question? Okay. What is a current asset? What has happened within less than 1 year? Yeah, they have to be used up within a year. Yeah. Yes. So what's the first current asset that we have here? Huh? Closing inventory. Closing. Closing inventory. But thank you, madam. At least you've answered. We appreciate. Because it's the inventory you've remained with. It's the current asset that you've remained with at the end of the year. So that's the value of that current asset. Okay. The cost of that current asset is the value of that current asset. No, of everything. Raw materials, work in progress, finished goods. You don't seem convinced, Mr. Casson. The cost of an asset is the value of that asset. Current or non-current. Okay. Okay, so where's our thing, our inventories for the end of the year? Let's see, where did I put that? Okay, so all these amounts, we're going to put them there. Raw materials, 18,100. Finished goods, 49,560. Work in progress. Okay, these are the closing values for these things. Yes, they can be used up within a year. Yes, yes. Remember, that's the purpose of this. So I appreciate your questions, Mr. Kasono. It's helping a lot of people. Mm. Okay, any other current assets? How many reached the balance sheet part? Yeah. Yes, receivables, yes. Yes, Mr. Chimunya, receivables will do what? Okay. So which figure are we going to use here? Because here we give a receivables and payables. Yeah. I want to see those who remember. Hey, that's wrong, sir. Not the 38,900. Okay. Mr. Twambo, which amount? Oh, since we know it's not, it's it's the 56,740. Remember, colleagues, receivables is an asset account. So asset accounts, usually their balances are on a debit. Then payables is a liability account. So liability accounts, their balances are usually on the credit side. So should you ever face a situation like this, you should know that the one on the debit is the receivables. The one on the credit is the payables. Are we okay with that? This how would it? Uh, still more. Still more, even though the swap it was payables and receivables, still you should know that. Okay. What if it was, you see, discount received and discount allowed, debit and credit there? Which one would be discount received? Which one would be discount allowed? Somebody give it a try. You see discount received and discount allowed, and they've put figures there. Which one will be discount allowed and which one will be discount received? Because there are many possibilities that many things Mr. Romeo can add into this. Okay. You might even include provision for doubtful debts. So, mhm, mhm. Okay, just swap. You have swapped, you have remixed. So just swap what you said. You've remixed it. Just swap. Yeah, yes. Colleagues, do we know why? Okay, because discount allowed. This is a discount. This is a discount you give your customer. Okay, so when you give a discount to your customer, you're receiving less money. Okay, so since you're receiving less money, you treat that like a loss, and a loss is treated as an expense. And according to the double entry rules, expense accounts usually have a balance on the debit side. Are we okay with that first part? Discount allowed, yes. Then the discount received is your supplier giving you a discount. So since you are paying less to your supplier, it's like you're saving money. Okay. So that money you've saved, you treat it as income. And remember, income accounts always have a balance on the credit side. As the professor would say, I hope you wrote that down. That's something you need to write down. Because if you forget it and it comes, you interchange and you'll be surprised. Things are not balancing. Okay, back to this question here. The other current asset, bank. Okay, bank. Okay, that's our total current assets, 163,914. Another important point to remember. Okay, if you see prepaid expenses and accrued income, those two are also current assets. Okay, colleagues? Prepaid expenses and accrued income, they're also what? Current assets. Okay. What is accrued income? Just Yes, Mr. Okay, let's polish. Let's um, Mr. Chimuna. Yes, you can come in. Income, not accrued expenses. Accrued in. Uh huh. Uh huh. Yeah. Okay, you're talking about accrued expenses. I'm talking about accrued. First, hold on. Madam Roslyn has raised her hand. Hold on, please. Madam Roslyn? Hmm. Okay. Oh, it's these three. The total of this is the value of the inventory. Okay. Then- yes, yes. Yes. Okay. Just think of it like this at your job. Okay. You don't get paid this month. You don't get paid next month. That salary of yours is building up. That's like accrued income. So that's a current asset. Okay. Because your income must be paid within 1 year. What happens if your income is not paid within 1 year? You disappear from your job. Yes. Then prepaid expenses when you pay for an expense in advance. So prepaid expenses, accrued income, they are both current assets. Okay, we can go to the next part. Okay, so the capital part. So here we're going to say capital. Okay, once we look at incomplete records, most of the calculations will be on this part here. So capital 17,120. Oh no, that's not, that's drawings. 274,912. Okay. Then what do we do next? For those who reach this part, after we put in capital, what do we do next? Add net profit. Okay, even though it's a loss, you're still adding it. Okay, colleagues, don't subtract if it's a loss. You're still adding it. You just represent it as a negative value. Yes. Yes. And you say add, and then you put the negative value. Because if you subtract, what in essence what you're doing is now you're actually adding the loss to the capital. And colleagues, what happens when you add your loss to your capital? It means you'll be overstating your capital. All right. Then what do we do next? Let's what? Drawings. Okay, so remember this equation. Capital plus profit minus drawings gives you your new capital. This equation is the one that's going to be used mostly in incomplete records. It expands, but that's where you start from there. So there's drawings. Drawings is how much? 17,120. Okay, so this is our ending capital. This is the capital at the end of the year. Any questions? All right, now we go to our liabilities. Do we ha- do we have any non-current liabilities? What's a non-current liability? Which figures in the last column? Oh, oh, okay, okay. No, kindly remember for the balance sheet, assets must equal. Did we? I never totaled them up. Oh, okay. Thank you, madam. Ish. Yes, we get our total assets. Tonight, you're dreaming of manufacturing accounts and balance sheets. Because usually you dream of what you thought about last at the end of the day. So one of you will dream about this, and you should tell me your dream, what it was about, including about this. Yes, what are non-current liabilities? Excuse me. Excuse me. What are non-current liabilities? Okay, which have to be paid, which can be paid after a year, right? Yes. Do we have any non-current liabilities? Capital drawings, premises. Oh, just give me 2 minutes. Hold on, please. Okay, we continue where we left off. So yes, I don't see any long-term liabilities. Capital advance premises, inflationary purchases, rent, office salary. That was a current liability. Yeah. So I don't think there are any non-current liabilities. So yes, so we go to the current liabilities. So it just seems it's payables. Okay. Yes, they will say long-term loan, debenture, unsecured bonds. Yeah, they've got those fancy names. What's wrong with that name? Payables. Hmm. Okay, so we total up our capital and liabilities. Okay, so I see where this discrepancy is coming from. That's hold on. Yes, colleagues, this is the answer for this question. So here on opening inventory, as we put 15,130, here they've put 17,130. As we put 15. Eh, but the question was saying 15,120, 130. So that's where this discrepancy is coming from. This one and this one here. Yes, Mr. Emmanuel? Oh, okay, 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 okay. Just hold on. I was just showing where the discrepancy is coming from. Yes, in the question, I think it should have been 17,130, but we saw on the trial balance is 15,130. So that's where this discrepancy is coming from. So there should have been a typing error in this question. But basically, yeah, that's how you do this balance sheet. Any question? Uh huh. It was these ones here. For the total assets. That's why I didn't add. Yes. Any questions, colleagues? Mhm. No, no, no. This total assets must equal total liabilities and capital. Mhm. Yes. There's a 2000 kwacha discrepancy. So this 2000 kwacha discrepancy in the solutions, okay, here it's 17,130. But in the trial balance it's written 15,130. So it should have been a typo error somewhere. No, we can see it here, sir. We just do this. If you change this one to 17,001, so the new cost of goods manufactured is 19296. Where the cost of goods manufactured 19296. Okay, so the gross profit changes. Let's see, net profit. Was this the same one? Let's see, net profit 3422. Yes, have you seen? It's now balanced. Yeah. So I think there was a typo error somewhere. I think here on the trial balance, where's that 1530? Yes, this raw materials here should have been 17,130, not 1530. So there was a typo error there. So for your study's sake, put 17,130 here in the document that you have. Put 17,130. Then it will balance for you. 70,130.